Hey guys, thanks for the market here today. What I'm going to go over is something that happened just this last week, and we've actually seen something very similar happen many times over the course of just the recent year of market action, as well as many years prior to that. So, what happened just this last week? We had a uh, big bounce here on Wednesday. We ended up closing over the previous 2 days highs right here, boom. Followed by the next day, again, strong, big green candle closing over the previous day's high, all right? When has that happened before? All right, I'm going to show you when that's happened before. We have right here, you can see this day right here closed over the previous few days highs, followed by the next day right here closed over the next day's high. You can see a little sideways trading, and then we ended up heading a little bit higher after that. Of course, we continued this dip down lower. And I want to mention something too, is that this recent action that we saw down here in October and November was actually one of the worst period of times in the markets that we've seen as far as bearishness is concerned. So even in that time, we saw another higher tick, all right? Then what happened next? Right here, you have another boom, green day, closing over the previous few days' highs, followed by the next day, closing over that same day's high. Boom, we headed higher for at least a few days higher, okay? Then right here, and this is more of what I think is going to happen now because the market has been in a major uptrend here. But here we go. So we've got boom, this green day closing over the previous day's high, followed by this other green day closing over the next day's high. Boom, you can see moved higher from there. Followed by right here, this day closing over the previous several days highs. Next day closing over the next day high, and you can see we headed higher after that. All right. The next time that happened was right here. You can see boom, closing over the previous day's high. Next day, closing over the next day's high. And you can see after that, we headed higher. Same thing over here. 1, 2, and then we headed higher from there. All right. Same thing over here. You can see 1, 2, headed higher from there. So we've got like 10 times that this has happened in just the last 8, 9 months that I'm showing you on this chart. And every single time we at least headed higher for a short-term bounce, okay? So, and you can see the other thing that I want to mention too is that we have a candle here like this that doesn't look great that ended up happening on Friday. But look at what happened when this happened previously. Here's a good example right here. You can see we had those 2 days closing over the previous day's high, 1, 2, and then followed by this little day, inside day, that looks very similar to what happened on Friday. So the point is, I think that most likely the market will see some kind of retracement higher. Okay, we've got gaps to fill up here, 1 gap, 2 gap. I think those gaps will get filled. We could see some kind of a retracement lower, maybe back into this area right here. This is the level that needs to hold here for the market. If you're looking at the Qs, you want about, let's just call it 178 to make it a nice round number. You want to have the NASDAQ, the Qs, QQQ, close above 178 in order for this bullish theory to hold. So if we somehow close below 178 next week, that'll kind of wipe out the theory here, because as you can see right here, for example, we broke higher right here, we headed higher, this theory worked, but then after that we ended up closing below that level right there. And that's kind of the similar level right here. And as you can see, once it broke that level, we headed lower, kind of retraced against that same level, and then headed lower again. So 178 is that level that needs to hold in order for this kind of bullish bounce theory to work. If we break 178, all bets are off. Most likely it's going to head lower. But I don't think that'll happen because, as you can see, even over here when we had the market was extremely bearish at this time in a major downtrend. All right, one of the worst bearish moves the market has ever seen, and we still got a bounce higher than those 2 days. All right, we still got a bounce higher. Obviously, we headed lower after that, but we still went higher than these 2 days right there. So that's what I think will happen. Eventually, we will see higher prices, most likely. Nothing is written in stone, but that's what I'm looking at here for the market. So I hope this video helps you out. If you have any questions about it, please just reach out to me. I love to talk shop and help traders out, whether you're new, intermediate, advanced, doesn't matter. I'm more than happy to chat with you and answer questions and give my thoughts to you. So what we're looking at here is our real-time portfolio tracker. It tracks all of the trades that we make here at thetradinganalyst.com. Both of the entries and the exits are both sent out via text message in real time to all of our paying clients at thetradinganalyst.com. You can see our average win is almost double the size of our average loss right here. Yes, we do have losing trades. Most of them are winners, as you can see. The winners far outweigh our losses. And you can see since July of last year, the portfolio tracker is up $237,000, and that's tracking every single trade that we make here at thetradinganalyst.com. And even just recently, we had a little bit of a losing streak, and we're still way up on the year. So if you're looking for long-term consistent results, then I highly recommend that you join the service and you can start receiving these winning trades sent directly to your cell phone. I look forward to having you as a new member. If you have any questions about that or the service in general, reach out to me and I'll be more than happy to talk with you. I look forward to trading with you and helping you grow your account on a consistent basis. I'll see you in there.